It's 2025 and you need to be trading. This is why I created this video right here, where I go over all the main smart money concepts and give you a step-by-step strategy to follow so you can start trading today. Make sure you like, subscribe, and comment down below any video ideas. Let's get straight into this video. First, let's get into our order blocks. Not just the last candle, but where the real volume was stacked. True order blocks are the origin of breakup structures or change of characters. And there are the beginning moves that form imbalances, such as fair value gaps, as we label them. And one thing is that they must be unmitigated. For a order block to be valid, it has to be unmitigated and untouched. If it's been tapped already, the moves is likely already play out. You're chasing nothing but filled orders, right? Let's look at these two order blocks right here. These are my two favorite order blocks, I would say. The main reason I like these two order blocks are how powerful they are, right? The bearish and engulfing order block is one of the most powerful order blocks, I would say. If you see a bearish engulfing order block, it's a bullish candle that's engulfed by a bearish candlestick, right? Price will pull back and mitigate it. This is what we call a mitigated order block. It would be unmitigated if price didn't tap inside of this, right? So price pull back, mitigate the open, then quickly expand lower. This right here is one of my other favorite order blocks. This is called our rejection order block right here. This is where we have a strong candlestick wick that took a prior liquidity low or a prior liquidity high. So after price clear a prior low or high, price usually expand higher and give us a break of a high or a lower time frame break right here, right? Right here it is like a higher time frame rejection, but on the lower time frames, price give us a lower time frame break. And on that pullback, right, you want to see price use this wick right here. This strong wick is called our rejection order block, right? You usually use the 25% or the 50%. The 50%, like I stated, is where a lot of the volume is stacked, right? The 50% of the order block. So this is where I usually place my trade, the 50%. And I'm targeting prior liquidity points. But our first major smart money concept that we utilize is our order blocks. Learn and master them, right? We have multiple order blocks. Make sure you watch my hour-long video, right? After you watch this video, where I just break it down simply, right? For any new beginners or anybody that just needs a refresher. Next, we got imbalance zones. Clear aggressive price actions where buyers or sellers fully dominate. We see price expand higher, but left this zone right here, right? This zone right here is a imbalance zone, or we call it a fair value gap. It's where these two candlestick wicks, they did not touch each other. Like, why did price fail to mitigate this old wick right here before rally higher, right? It's because it needs to pull back and rebalance it before extending higher. Think of it like a one-sided candle that has no pullbacks, right? These gaps, like I stated, they need to be rebalanced. When we pair these fair value gaps with our order blocks, right, the previous concepts, a order block and a fair value gap, that's called a unicorn model. That right there is a powerful model. I just made a video on that model just the other day. Make sure you watch that video also. But those two right there, just those two concepts right there is already crazy, right? But we have more, right? Let's keep going. Our next point is our breakup structure. This confirms our trend continuation. In a bearish leg, a breakup structure breaks prior lows, but in a bullish leg, a breakup structure breaks the prior highs. As you can see right here, when price gives us this liquidity sweep of this old low, on a bullish leg, as you can see, a breakup structure will give you a break of the prior swing high right here. But in a bearish standpoint, right, if we were going lower, this right here would be a bearish breakup structure if price was extending lower to continue this trend down here. A change of character, right, is the first crack in the current trend. Is the signal for a potential reversal. You see price was once in this downtrend right here to then quickly manipulate lower to give us a liquidity sweep of these lows, to then expand higher and give us a change of character of this high right here. Price was once in a downtrend, but now price changed to be in a uptrend. Now all the bullish pity arrays price gonna respect. That's why the change of character is a sign of a potential reversal. Once we spot it, we scale down to the lower time frames and refine our order block and catch that lower time frame reversal play. The basic truth is that each concept alone is just noise. Like, knowing order blocks and knowing fair value gaps by themselves, like, there's no point, right? It's when you grab it all and you put it together, right? When you piece it together, when you chain them together, that's when, right? That's when you can expose how the institutions really enter, how they trap the traders, and how to deliver beautiful price action. Once we master the sequence, we can master our entries with conviction and take our entries with confidence, right? A lot of traders, like I stated, they're scared to take their trades, but right, once you have everything aligned, you understand the order blocks, the imbalances, you understand that price will first give you a liquidity sweep of old lows or old highs, depending on the setup. As you can see right here, price was once in this downtrend. Price cleared the old lows, change of character, right? Downtrend. Now we're in a uptrend. On that pullback, price will look for fair value gaps in order blocks or certain OTE levels. I have videos on that also, to then continue this trend right here to attack prior buy side liquidity points. Now let's get into this simple strategy. Start on the higher time frames, on the daily, in the 4-hour, and identify the narrative. Like, what is price trying to tell us, right? Is it a break of structure? Do we have a change continuation? Or do we have a change of character, right? Like a reversal setup. Is price continuing? As you can see, is price giving us consistent break of structures, where with every pullback, price is going to respect the prior high to continue the trend? Or is price clearing a old high and then push down lower to then give us a change of character, giving us a reversal type of setup? All of this right here starts on the higher time frames. You have to understand the higher time frame trend before you scale down to the lower time frames to see the overall picture. Once we identify the higher time frame narrative, we must find the origin order block. We use the zone that caused the major break of structure or the major higher time frame change of character. This is going to be our higher time frame zone, where we scale down to the lower time frame for price to tap inside of that zone. Say this is a higher time frame 4-hour zone right here. We'll then scale down on a lower time frame, wait for a lower time frame liquidity sweep, then for price to push down lower, give us a market structure shift, and on that pullback, we'll place our entry and our stop loss up here to then attack prior lows. This is right here the step-by-step framework. We use the 4-hour and the daily to identify the overall narrative. And then we scale down to the lower time frames, the 1-hour or the 4-hour even, to find the higher time frame zone that price may pull into. It must be unmitigated, like I stated before. It must have a clear imbalance or a fair value gap displacement, or it must be refined using wicks or fair value gap precision, right? Basically, it just must be a higher time frame zone that haven't been used yet. Next is that we must wait for liquidity to get snatched. Smart money target equal highs / equal lows. Either trend line touches or session opens or session closes. Let the liquidity sweep happen, right? That's the number one thing that a lot of traders mess up. They're in such a hurry looking that they take any type of zone for price to tap into it, for price to go. But if price didn't clear prior old highs, as you can see right here, if price didn't clear prior old highs and give you a lower time frame market structure shift, any zone right here, right, may not work, right? Price has to give you a liquidity sweep first, because this is going to be our manipulation right here. Price has to first accumulate, manipulate, and then distribute. And on that pullback, right, this is where we can get that distribution entry. After we let the sweep happen, we can drop to the lower time frames, either the 15 / the 5 minutes time frames, and then we watch for fresh breaker structures / change of characters, plus our displacement right here. I'm gonna go over this right here, this exact model right here of this exact trade. And then lastly is that we enter with logic, not emotion. Our stop loss is either, I usually place my stop loss at the candlestick wick or the lower body of the order block, depending on the setup. My second take profit is the next higher time frame structure, and I trail my profits once the lower time frame breaker structure has been formed. Let's go over this model right here. The first thing is that we have to find a higher time frame zone, like I stated before. This model right here may happen on the 3 minutes, as you can see right here, or the 15 minutes, or the hourly. It just depends on what type of trader are you. Me personally, I'm a scalper, right? So my higher time frames personally is the 4-hour and the 1-hour. Those the time frames that I usually use to develop my bias, right? My narrative. Then I scale down on the 15 minutes to the 30 minutes time frames, and I find my zones, right, that cause the major market structure shifts. This, as you can see right here, Once price comes inside of my higher time frame zone, which is either like a 15-minute or a 30-minute or sometimes even a 1-hour zone. When price comes out of my zone, the first thing I look for, like I stated before, the first step for the pattern is the liquidity sweep. We want to see price sweep liquidity. We want to see liquidity get snatched. We see price rally higher, took a liquidity of these old highs and mitigate this higher time frame zone. It has to be a unmitigated zone. It must have clear fair value gap or a clear displacement, or it must be like a rejection order block. Like I stated before, right? The rejection order blocks, or like one of the most powerful wicks, I'll say, right? The 50% or the 25% is beautiful entry point. Then on the lower time frames, after price sweep this high and give us this liquidity sweep, price quickly extend lower and give us this market structure shift. Now on that pullback, right? This is where now I'm looking for my entry now, right? I'm either gonna look for a breaker block, a order block, a mitigation block, a rejection block, or just a fair value gap. Once we have two of them aligned together, that makes that a powerful zone. As you can see for this model right here, price left this fair value gap and this breaker block right here. The last bearish candlestick that went higher to give us this small liquidity sweep of this prior candlestick high right here. So price went higher, swept this high to then give us a lower time frame breaker structure. Now on that pullback, price pull back, mitigate that fair value gap, align with this 3-minute breaker, and what we're targeting for a clean 1, 2, 3 R target, right? This is the exact format right here. First we have our accumulation, price extend higher, manipulate these old highs inside of a higher time frame zone, right? HTF right here. For price to then extend lower, give us a market structure shift. And on that pullback, we're either gonna find, like for this example, this is like a mitigation block for price to extend lower, or it may be a breaker or a order block or a fair value gap. Like I stated, it's multiple zones. So make sure you watch the 1-hour trading course down below so you can see all the multiple entries that we have. It's multiple ones of them. Or go through my playlist section where I go over all the smart money concepts, right? And watch them and study them so we can bring this fully together. But I hope you're getting a lot of value out of this video right here. Now let's hop on the charts and go over how to execute this strategy live in action. Before we continue the video, we're currently looking at the AUD/USD on the 15 minutes time frames. This will be a scalping model example. Say if we're starting from the 15 minutes and then scale down on the 3 or the 1 minute time frames to find our entries. We see that price is giving us consistent breakup structures to the upside. Then for price to quickly expand lower. On this drop lower right here, a drop in a bullish market is a hunt for sell stops. Price was just pushing down lower to clear all these old lows right here. So price rally lower, clear this relative equal low to then give us a breakup structure. Then price build all this internal range liquidity, right? Liquidity is hiding above and below this old range right here. And we see that price to leave this unmitigated higher time frame rejection order block. When we're a scalper, the 15 minutes, the 30 minutes, and the 1 hour or the time frames for the scalpers. So I usually use the 15 minute time frame zones, then scale down on the 3 minutes to find my lower time frame market structure shifts. Now see if price can push down inside of this zone down here. We see price rally lower, tap inside of my higher time frame zone, my 15 minute zone. Now let's scale down to the 3 minutes time frames. On the 3 minutes time frames, all I'm looking for, right? I can either take the trade on the first pullback or wait for a better confirmation entry, right? I'm going to show you guys right now. Safe price push down lower, give you a liquidity sweep of the old low and mitigate your 15 minute zone, and then give you a market structure shift. As you can see right here, your first entry is your confirmation entry. This is our RTO entry. We call this the RTO entry just because it's confirmed, but right, you don't know if it's gonna play out. That's kind of like the main reason. It's just a return to order block. Price mitigate the higher time frame, you get a lower time frame market structure shift or a change of character, like I stated right here. Your stop loss at this old low, and usually they're going to target the prior high. This is just the simple entry, the entry that I personally like to use if I miss this one, right? Because sometimes you miss this one and price is just too fast and you miss this one, right? What you want to see is for price to break the high, right? You want to see a full body break of the high that did that RTO entry. Once you get this full body break right here, right? Let's play price for a little bit. This all you want to see, right? Like a full body break. Now this full candlestick right here, perfect. This is the zone that we want to see price come back later and retest. With this entry right here, it's extremely safe. That's why like this is more of a beginner strategy, I would say, because I'm giving you like the super safe entry right here, right? Me personally, I would usually take this entry right here, this 15-minute entry. I'm already in, right? Possibly on the 15 seconds, I'm already taking it here. I'm already in a couple trades on the pullback. I'm in again, right? But for any beginners, right, anybody that just needs a safe and powerful model that consistently works, right? It's rules to it, but it's consistent and it works, and you can cash at least 2 or 3 trades per week. That's gonna help you pass your funded accounts and help you like stay consistent. That's the key, right? Is to be consistent. It's not to catch and make money every day, but to be consistent. So now we got this confirmed model right here. Our stop loss can either be at this low or this low right here, right? Just place your stop loss at this candlestick low, and I'm targeting this wick high right here, or let's get back that up to the 15-minute time frames, or I can target the main range high. This trade has been confirmed. Price was originally giving us consistent breakup structures to these old highs, but left this old consolidation high. Price broke through the consolidation lows, but failed to take the consolidation highs. So as soon as we get our entries, all I want to see is for a pullback inside of this zone right here, this broken old high, to then for price to extend higher to attack this old buy side high right here. Let's play price and see. There we go. Price pulled back inside of the 3-minute zone. Let's scale down on the 3-minute time frame so we can see it a little bit better. Boom. This zone right here is beautiful for 2 reasons. First, it was unmitigated. Second, it had a liquidity low right beneath it, right? This inducement, like I stated, the first pullback is our inducement. Look how clean price cleaned this right here. Price swept it, right? Your stop loss at the candlestick wick, so you're giving it room just in case price pull back. Play around your trade. You're giving it room. Now we want to see it rally all the way higher to attack the prior highs. There's so much entries when you're trading. That's with every breakup structure. Like say price broke through this old high right here, and you're like, spec, I missed the trade. I don't know where, right? With every breakup structure, price will use and respect the next high, right? The broken old high is the same entry that we just used. The exact same way price respect this, price is gonna respect this. Let me scale back up to the 15-minute time frames. Boom, right? With every break, right, price respected it to then continue, just like I stated, right? Right after we get this change of character, price is just gonna extend higher, pull back, respect. Every break, pull back, respect. So if you miss that first entry, right, your next entry could be right here. Your stop loss at the candlestick low, and I'm targeting the same high right here. All right, so as soon as you get this break right here, that's why you have to be on the charts and super active, because as soon as you get this break right here, if you are paying attention, right, if you're paying attention and you're active, you could quickly place your trade, your stop loss down here, and be confident, because now it's like the trade has been confirmed. Price give you a major break right here, retested the first entry. Now we get a second break up here. Now we're getting this second entry up here. Play price, pull back, retest that broken zone. We're attacking that buy side liquidity high. This is where prior orders has been. Boom. This right here is what we call our market maker buy model. This is like probably one of the best and most powerful strategies up here, right? Like one of the most simple and powerful strategies that uses simple concept, right? All these concepts are extremely simple. I've broken it down extremely simple in this video, but make sure you go watch that 1-hour course just so you can understand all the major concepts. And if you're a person that wants to live trade with me and my brother Arkham Trades every single morning at 9 a.m. EST, make sure to click the first link in the description to join the family every single morning at 9 a.m. EST to live trade with us and catch these beautiful trades. Well, this is it. I hope you got a lot of value out of this video. If you want the full PDF of this exact video, click the first link in the description and join the Spark Trading community, where you have access to a full library and a full trading course of me and my brother Arkham Trades, of all our PDFs and our free trading course where we go over this complete concept. Make sure you like, subscribe, and comment down below any video suggestion or what do you think of this video right here. I love all of the feedback. But this is it. Spektrades out.